Good afternoon, this is Jack from thearchershop.net, and this is an intraday video for Thursday, the 16th of January. Our disclaimer: we do this for educational purposes only. We're here to share our technical analysis with you. We hope you can take some of what we're doing, learn from it, transfer to your own charts, and not here to issue trading signals. Right. The reason I'm having this webinar is because we're in a really interesting technical situation here, which is fascinating just from a pattern point of view, but also has big implications for what happens over the next couple of weeks, basically for the rest of January. And I think a decision is likely to get made here over the next, could have been made today, might be made tomorrow, but over the next day or two, and probably earlier during that period rather than later. And the period, and basically it amounts to this. The best picture is not this rising wedge, but I would note that we have a perfect rising wedge here. This is 1, 2, 3. It's a gorgeous resistance trend line. We've been testing it today. We're testing it right now as we speak. If it breaks up slightly, that could be a bearish overthrow. But if we convert 33.12 and go, and obviously it's late in the day, so we'd probably be doing that overnight, then that actually has big implications for what happens here. The big support level here on ES is the rising wedge support trend line. This is only 2 touches, but it gains weight because there are 3 touches on the resistance trend line. This is a decent looking mature rising wedge, and it's got rising support just slightly under the 3300 area. That's the support that really needs to be broken on ES to short the to set up the downside. Now let's also have a look at SPX. Now this is the 5-minute chart showing the same wedge on SPX. Now this is the resistance, the support I was talking about yesterday morning, and this obviously broke down, but then we gapped up, back into the wedge and back over the wedge. So we actually gapped over at the open tomorrow, came back tested the wedge resistance, and is going. Now the possibility I want to talk about here is the possibility that this wedge is not going to break down at all, that in fact it is breaking up. Now there's 2 things that could be happening here. One, the wedge could be delivering a bearish overthrow, in which case we will go back up under that resistance trend line, which is currently in about the 33.06 area, and then we will go down through the support trend line, which now, because we went back up to here, I've redrawn that through here, so the wedge support is now in the 32.88 area. Break through that, and this wedge is breaking down. Break under this trend line again, and 32.06 area, and this wedge is not breaking up. Why is that important? Well, this is a very rare setup. It's not often that wedges break up against their trend, which is obviously fairly heavily down. But when they do, they tend to be very good performers. Now the way they perform is you can only trust the targets if you never break back below the resistance trend line, which we've of course not done here. Ideally, it breaks up, it back tests the resistance trend line, and then continues up from there, and that may be exactly what we're doing at the moment. What are the implications if that is the case? Well, we will have broken up at about 33.03. This wedge starts at 32.14. That's 89 handles. You then add that 89 handles to the breakout point, and you would get 33.92 would be the target on this wedge, and that, if we don't break back below this trend line, we get up over 33.30, I will be viewing that as a credible target and the obvious target. And these tend to be, on breaks up, very reliable patterns indeed. You're not talking about a 60%, 61%, or 38.2%. You're talking about basically a flat, the same level rise as the wedge, basically up again, and they are very good at making targets. And that's the inflection point we are in here. We're between 2 resistance trend lines. This broken resistance trend line is now support. The resistance trend line on ES, which is now overthrowing slightly or breaking up, one or the other, is resistance. And it's one or the other. And we're going to see a decision made here, and whichever way that decision goes needs to be respected. If we see a break up, then I'll be looking, and we don't see a break back below this resistance trend line again, then I'll be looking at 33.92 as the obvious target. And we're looking at a serious break up. In the event that we get back below this trend line support, which is in the 32.88 area approximately at the moment, but obviously is rising, then if we get back below this resistance trend line, at that stage I'll no longer be taking 33.92 as a potential target, which at the moment it is. If we get back and break below this trend line here, then that is the wedge having bearishly overthrown, breaking down, and I would expect to see follow through to the downside. If we never break right below this trend line here and head up, then 33.92 would be the target. Now, what could get us there? Well, you'll notice we were saying a couple of days ago that we were expecting 3,300 to be a wall. To be precise, that was a call wall. And the call wall is a point at which a huge number of calls have been sold. And what that means is there's an awful lot of exposure for put sellers with ES over 3,300. Now, to be honest, I wasn't expecting that to break up before OPEX, and it has broken up, but that gives us potentially the fuel as SPX goes higher to see a huge short covering rally that can actually get us quite a lot of the way to the distance to that target. We've been in the inflection point all day. If this actually starts accelerating to the upside and heads upside overnight, then what we're looking at there is an awful lot of the holders of those, or the sellers of those calls covering, and there are a lot of them. And that's what, and basically you've got a call wall on the upside where that tends to be the case, and a put floor on the downside, which in this case is in the 3150 area. That call wall has been breached. We're waiting to see if it follows through. It's possible. We're looking at the start of that follow through now. And I'm watching with the greatest interest to see whether we are. If we do, this could take off. We've got the upper level in the 33.12.25 area today. We're slightly over that. If we head up through, then this could just keep going. And if it gets far enough, then at that stage, I will be assuming that we have broken up. And unless we then get a break back below that resistance trend line, in which case another option may be happening, we could have turned into a channel, etc., etc., etc. I will be taking that target at 33.92 very seriously indeed. So that is where we are. If this is a bearish scenario, then we are slightly bearishly overthrowing this wedge resistance now, and it's a nice wedge. So if this breaks down, then that's a break to be respected. And if we are breaking up here, then we're likely to keep going. And I'd really be expecting that in all likelihood to follow through to the upside overnight. Be wary. Obviously, this is a big inflection point. We haven't immediately broken back down this morning. That leaves the possibility here that we are in fact breaking up. If we are breaking up, don't stand in the way. Because this could get very serious and very fast. We're also talking about, and this is something I'm going to be talking about in my next post. If you were reading the one where I was looking at the first 5 days of January, then I basically totally rubbished that statistic because it was crap. Really, you'd be better off just tossing a coin. However, the next one I'm doing is the January barometer. They'll be coming out hopefully tomorrow, otherwise Monday, and I'll be talking about that, and that is just the opposite. That's actually a very reliable stat. And in the event, because we've got 2 weeks left of January, in the event that we close January down, which we still could, then that gives a 50% higher chance that we continue down, close further down at the end of 2020. Admittedly, that only raises it from about 28% to about 42 or 43. But if we close green, and that would be, and normally I think something like 77% of years close green. But if we close green, the chances are that we will close up from that point at the end of January, at the end of 2020, is then 87%, which is actually a pretty impressive stat. So the next 2 weeks are extremely important for what happens for the rest of the year. If we see a wild break to the upside, then chances are that will, well, statistically, that is likely to hold into the end of the year and be higher. So I'm watching this inflection point with particular interest here, and we will see how it goes. We've just had an opportunity to get a 1 minute sell signal brewing here, and we haven't seen any divergence. Watching this with interest. Obviously things can get a bit brisk in the last 20 minutes, but if we see a break up, don't expect it. If we see a break up and it looks hard, it may well not turn back down. We may be on the way back up in effect to 3,400, and we may be reaching that possibly in January. So that is what I wanted to say today. All right, guys, any questions? Bit of a technical bombshell, I know. But it's something you should be aware of. It's a rare setup, and you really don't see these terribly often. And I'm fascinated to see it here. Okay, in that case, if there are no questions, that's a wrap. I will catch you guys on the Twitter feed later if we get something to sell, and obviously watching what happens here at 33.12 with great interest. If we see some rejection, which we're not seeing yet, then then that could follow through. If it breaks up and keeps going, don't short it, because I certainly won't be. All right, great. No worries, Chris. Cheers, guys. Catch you later.